Hey, so I want to look at DraftKings. Ticker symbol is DKNG. Last time we looked at this was on June 4th. We marked it red, so I didn't like the price at that point. But again, we'll look at the technical analysis, see if that's changed at all. The buy points that I had marked are 15 and 17, with resistance points at 20, 24, and 30. So right there, I'm seeing why I marked it red is that there was a resistance point that we saw at 24. It was trading at 24. Um, the notes that we left ourselves were possibly found new support at 17, and an uptrend was intact for the past 5 months. Okay, so we'll see if anything changes in terms of the numbers or if that uptrend has broken, which I don't think it has. Uh, but yeah, let's go over some news first, and then we'll jump into the technical analysis and just see what's been going on with this one. Uh, and again, if you have any questions during this or want to add anything that you've come across, especially over the past month, feel free to let me know in the comments. It would just help keep me and probably others informed. And also, if you have any questions, feel free to ask, and I'll do my best to answer that. But so the news. So with DraftKings, so just some background here that I found is DraftKings has increased about 40% over the past quarter and have gained about 90% in the last year. So that's great. That's why this is a hype type stock. It's growing very rapidly, so we like that. Over the past 2 months, 10 earnings estimates moved higher compared to no one said anything about it going lower. Again, I guess this one has not been profitable yet. Consensus estimate increasing from negative 206 per share to now negative 188. So it's moving in the right direction, but still negative. So you know, something to factor in here. I just thought this was interesting. In 2022, legal sports wagers on sites like FanDuel and DraftKings totaled $93 billion. So I don't know if that article mentioned the revenue. So it doesn't mention the revenue per quarter or per year, but one of these articles in the future will mention it. So again, the caveat here is wagers. This isn't, as far as I'm reading, the way I'm reading it is, it's just the wagers. It's just the bets. So there's $93 billion in bets, not necessarily revenue out there. It's just the bets. So I don't know what that would equate to in revenue. $93 in betting, does that equal $9 billion in revenue in 22? That would be the number I'm after. But again, I just thought this was a good idea to see how many people were actually betting in terms of money, at least. I'd like to know how many people are doing the betting, but again. So let's just move on here. Analysts expect DraftKings to post earnings of negative 29 cents per share, which would mark growth of 42% from last year. Revenue is projecting net sales of 715 million, which would be up 53%. So big growth. We're loving that. And we're focusing on revenue until they're profitable. And then we do want to start looking at earnings per share. For the full year, we mentioned this, that it's now expecting earnings of negative $1.88 per share, but that revenue of $3.2 billion. So again, $93 billion in wages or wagers. But revenue, at least for DraftKings, one of the bigger in this sector, is making $3.2 billion in a year. So I'd be curious to know, like, what proportion of gamblers in the U.S. are using DraftKings. So of that 93, is it like 40 billion is DraftKings, and then they're making 3 billion off of that? Probably too deep, but maybe they'll say something in their quarterly report. And then the changes here for earnings per share, it's going up about 40%. This is projected. And then revenue is going up 42%. And that's going to, I mean, this still has a lot of potential, so maybe that can continue to either stay the same or grow. but I would imagine over time, as the revenue continues to get bigger, that 42% is going to slowly just decrease, but hopefully the revenue in terms of numbers grow. It's just if they grow $1 billion more, last year that probably was like 100% growth. Another $1 billion on top of 3.2, that's only going to be like 30%. So just something to keep in mind, but these are great figures today, and that's what we're looking at. So next, yeah, this was very interesting. So there's this company, Points Bets, which I believe is in Australia. I think an article will mention it going forward. But DraftKings announced that it delivered a letter to both this non-executive chairman and the CEO of Points Bets, setting forth an indicative offer to acquire Points Bets. So I'm liking that. I truly like this idea. It would help DraftKings just grow instantly. And they're not too big. I mean, they were going to do an all-cash transaction to purchase this for $195 billion. So this isn't like a major deal, but I mean, that's about, what is that? I'm going to do some quick math, just getting the calculator. So 0.2 divided by 3.2. So that was about 6% of revenue they're offering here, which would have been a 30% premium to an existing agreement. So let's go into the next slide. It was between Fanatics here, as the title mentions. And so this gives a little more detail. So a bidding war was underway for this Australian sports betting site, Points Bets. DraftKings offered $195 million in cash, so no stock options, just straight cash. And that offer was $45 million more than this Fanatics. So Fanatics, I don't know if they're publicly traded. If they are, I don't follow them. And the fact that there's no ticker symbol here, I don't believe they're publicly traded today, at least. But they're clearly, this Fanatics, they're trying to get into this sector, this sports gambling, or gambling through an app, or I guess it's the same thing. So that, we're going to pay attention to that, because they're going after a company that DraftKings thought was at least at a decent price to spend $195 million. Again, that was that's 6% of their revenue. So to wrap this one up, PointsBet said it had received the unsolicited offer, and the directors, along with their advisors, are considering it. It also noted that subject to the outcome of its review, the board continues to recommend that shareholders vote in favor of Fanatics. So this is already kind of a warning that, yeah, DraftKings did this, but their board still, I guess they've probably already been in talks with Fanatics, and they thought it was a good deal from the start. They're not going to get into this game, or I don't know. And then to wrap this one up, it mentions how the company's investors are scheduled to cast their ballots at the end of June. And here we are in July, so clearly a decision was made. And DraftKings dropped it. So I'm not sure which one came first, or if it was just published on the same day, probably the same day. But all of a sudden, DraftKings no longer pursuing this acquisition with Points Bets, and I believe the reason is right here. Fanatics boosted its offer by 50% to $225 million, compared to DraftKings, which offered $195 million. I also saw an article, I don't know if I mentioned it, but I guess DraftKings didn't file the offer properly. I'm sure that's not the case, considering Fanatics raised their price to $225. I think DraftKings had a number in mind, and once Fanatics passed that number, DraftKings just thought, no, we're fine where we are. So let's go into this. Okay, so this article goes in to say they haven't turned a profit yet, but they're growing revenue at a rapid pace. The first quarter of 2023, it increased revenue 84% year over year to $770 million. So I guess times 4, yeah, that's like 3.0, I guess, a little over 3.0. It raised its 2023 revenue guidance to a range of 3.13. Okay, that adds up. So it was 2.8 to about 3. Now they're saying it's going to be between 3.1, 3.2. So that's good. You know, that shows how quickly they're raising revenue. DraftKings is among the leaders and most established players in a growing market, which is expected to nearly triple in size from a $7 billion business today to a $23 billion business in 7 years. So this is why we're looking at this one. This one and, gosh, what's the other one? Flutter Company. They own FanDuel. So we're following those two because they seem to be the most. And with a business segment looking to triple, these companies should cash in on that. So again, that's why we're looking at these. And another factor is currently it's only in or legal in 33 states, which allows sports betting. So just like it says here, plenty of room to grow. Something that it also pointed out is it's seen its price to sales ratio increase from 3.4 to 4.5 over the past year. That's a metric that I try to keep in tabs, but a lot of people don't keep track of it. So whenever I see it, I like to note it, but because we don't come across that data too frequently, I can't give that information too much priority, but it's nice to see. It's very nice to see. I also like, no, okay, that's fine. So I think this is our last article before we go into the technical analysis. So again, just for a little more background on this, DraftKings surprised the street to the upside during its first quarter earnings in May, posting revenue of that $770 million versus what everyone was expecting at $705. The company guided for a full year adjusted EBITDA loss of $315, which was down from what they previously projected of $400. So again, this is actually pointing out to me that not only are they making money faster, like revenue, but it, again, until I see the numbers, it's giving me the hint that they're improving their profits. You know, they're earning more money, but they're not spending more money. That's kind of the hint that I'm getting here, which is a good sign. Bloomberg currently projects DraftKings to post $5.83 million in adjusted EBITDA for the second quarter when the company reports it's in early August. So got a little ways until we see that. More than 100% increase from its results from the same period last year. Very good. Analysts are realizing that Q2 expectations are too low for DraftKings and the industry. Okay, we're getting more hints here. DraftKings CFO Jason Park referenced more parlays and shrinking promotions are the key contributors to improving gross margins. When asked what's been most impactful for DraftKings over the last year, parlays was the center of the discussion. So if you're unfamiliar, parlays, what they're referring to is making a bet on multiple things in the same game. I guess that's very popular, clearly. And then shrinking promotions, which we might touch on that. Part of the gross. So let's just wrap this article up. So online sports betting was cleared for state-by-state legalization in 2018. Multiple states have been added each year. Again, we noticed that trend, and so we want to see that continue. And then it wraps up. An important part of the growth story, the trend looks like it's slowing down though. So that's not what we like to see. And it points to California's proposition to legalize sports betting didn't go through in November. So it's slowing down. showing legalization might actually allow sports books to stabilize their balance sheets. Um, this is this is the last piece of it. Um, Let me go back for just a second. So the promotions. I don't think I went into that, but the promotions. Uh, so what's happening is they were spending whatever a ton of money promoting their app when new states were becoming legalized for sports betting. And if all of a sudden that kind of stops, so it's not getting introduced to California or some of these other 17 states that haven't legalized yet, uh, this will let them stabilize their marketing. So instead of a new state getting introduced, they have to pump in another $100 million into that state to make sure everyone's aware of it. They don't need to do that. They're already established in the states that do allow it, so their marketing can even just stay the same, and revenue should continue to climb. That's what they're talking about. And it's not necessarily shrinking promotions. It's more, I mean, the fact that they said it, I guess it is shrinking, but even if it's just stable, that seems like it's a win for this company. And so to wrap this one up, also they mentioned how price targets increased for DraftKings to 36 from 30. And also it's gaining market share in the states that have legalized sports betting. So here on the screen we have this light green color is the states that are legal. Those, well, the blue ones are the illegal ones, and then that color that's in between, like a turquoise, those are legalized, but it hasn't officially launched yet. And then to wrap up the article up at the top, DraftKings just overtook FanDuel in weekly betting in New York, but New York's a very big state, and that was for the first time it did that. So I don't know how long it's been legal in New York, but it just passed them, which I'm sure that's a big deal. I mean, you want control of these big states, and it also holds a 50% of the gross gaming revenue in Massachusetts, which is where it's from apparently. And so I share this map because, I mean, it's huge. I mean, so we have some big states here that have been legalized already. So New York is huge. That's, if it's not the biggest, it's easily top 5. Pennsylvania, big state too. So that's already been introduced. I think Pennsylvania's fairly recent. Actually, they're all fairly recent. So to see them all starting to hopefully gain revenue in those states is big. And then here's another big one, Florida. They haven't launched there yet. So that's instantly going to be tons of revenue for them. Whatever they're making in New York, times that by, say, 0.8 or maybe 1 even. That's the type of revenue they're going to make in Florida. And then we still have huge states out there. Texas and California haven't legalized it. And I would say even Missouri is kind of decent. But Texas and California, when those legalize it, there's going to be a big pop in revenue for all these companies. But that wraps up that. So now into the technicals. So again, last time we looked at this was June 4th. So let's look at that. June 4th was right about here. So about 24, that's what we have on our sheet. We had buy points of 15 and 17. So 17 is down here. So clearly I thought it might pull back. It has not. Because again, here was June 2nd, or June 4th, I mean, right here at 24. Since then, it actually traded sideways for a couple weeks. We should have marked it. I wish we would have came back to it sooner. But who would have known it would fly up like this? But yeah, so it looks like I was thinking this would pull back because again, we saw points of resistance here at 20. So it was in this uptrend for a while. That's what we noted in the notes. and then it looked like it stalled out at 20. It hit its head there once, pulled back, and then all of a sudden it made it through. But it was only there for a week, so too early to tell. And then all of a sudden at 24, yeah, I guess we probably should have got in, but oh well. So then all of a sudden it hits its head at 24. So clearly I must have been thinking it's met resistance, because this right here is when we made a decision to stay away from this one. So right here, clearly my thinking was it found another stopping point, but I didn't think it would stall out and continue to grow like it did here before. I thought it was going to stall out and maybe pull back to $17. Clearly that didn't happen. That uptrend, it is still intact. And so between now and then, clearly it traded sideways for about a month, and then right at the end of June. So oddly enough, whenever DraftKings didn't purchase that company, the stock went up. I would have thought it would get more exposure. I mean, I realized PointsBet was small, but they were making it sound like there was going to be all these synergies between the two. But clearly, the investors are happier that it didn't go through, apparently, because that's how it's reacting. So I guess just to update this, so it went from 24, it's currently at 30, which, again, there's another red line we have marked here. So I'm going to scroll out a little bit to see what that's about. So 30 right here, this is all that line is representing, is from about December of 2021, whenever it broke 30 on its way down. For some reason, it was hitting its head there twice. It went up, pulled back, went up again, pulled back, and then we've been in this funk for whatever, a year, maybe 2 years, and then all of a sudden, the start of 2023, we start to see this rally, and it's a big one. So that is why 30 is there. At this point, this uptrend is a thing, and man, I'm tempted to get in this one sooner rather than later, but I'm going to try to stay true to this to the best of my abilities. For some reason, I just have like a gut feeling that now might be a decent time to pick this one up, but it rallied pretty hard pretty fast, so I guess, yeah, we'll stick to our guns here. So now it's currently at 30. If I were to buy this one this week, I would want this to pull back to 24. So I'm going to, I'll keep in 17, but I'm adding in 24 and removing, I think it was 15. I took that out. I'm gonna mark 24 as my figure right now, as the primary number. In terms of resistance, I am going to get rid of 20 because I had that. 24, for right now, I'm going to get rid of it, and I'll keep, I'm going to keep 30, and I guess I'll put in 29. That doesn't really make sense to do it, but just to, I guess, keep me in the same type of pattern, I'm going to put both. So what those numbers are, if we look at the top of this uptrend in yellow, which we can make that purple. So the top of the trend line for this week, that is 29. And again, that little red line, that is 30. So the reason why I kind of had this gut feeling that maybe I should pick it up now rather than later, but I think we have some time, is that you can see this red line here at 30. The next one we have is 53. So this one could double very quickly, and there's not much resistance or activity in between. So it went up very fast. Yes, there was very severe pullbacks, but it can climb that quickly. Like, um, I haven't been much to like trade actively, but um, I guess where I was going with that is, it's down here at 30, but if all of a sudden in like 2 weeks, or maybe if next month, if I had any stock in this, and all of a sudden next month when earnings came out, I saw this fly up to 54, which is that next red, or 53, that next red line. That is so far above our trend line or outside of the trend line range that I would need to sell. Like, I just would need to, because it would be so overvalued. Not saying that that's going to happen, but just that's what I'm imagining could happen. I don't know. We'll see. So I guess for right now, I am going to keep it red for those two reasons. If we zoom in, number one, it's at this very minor resistance line at 30. But more importantly, it is trading outside of the trend line. If it was down towards the bottom, yeah, I'd probably go out and pick up a dip. So we'll add in that note to buy or add on dips. And I'm going to remove possibly found new support at 17. The other thing is uptrend since January of this year. Uptrend since January, and that's about 7 months now. So that pretty much wraps this up. Let's just do a quick recap here. So we have DraftKings still in red, so I'm not liking it at this point at the moment. But if it pulled back to 24, which would be more of the bottom of that uptrend, yeah, I'd pick this one up. And then we have resistance at 29 and 30. Again, that's why we're going to hold off for now, see if we can find a better opportunity, like maybe a teledoc. And then that uptrend that began in January of 2023 of this year, 7 months still intact, but we'd like to add on to this at dips, or maybe I should just say buy dips. But yeah, that wraps this up. So again, if you want to add any commentary, if you have an opinion on the buy points or whatever, feel free to share that. I'd be happy to read it. Or if you have any questions, feel free to ask those, and I'll do my best to answer them. Otherwise, that wraps it up. So please like, subscribe, and I'll see you on the next one. Bye.